So thank you for coming. It's 12:30 Pacific time. I decided to do early, half an hour early, as I have other things to do. So half a day for me is trading, teaching trading, um, and then another half of day for me is related to trading, like learning. So if I spend whole day just uh, watching market and all that, and then sleeping, etc., then it's just a waste of time. So I decided, okay, I have to shut it down 1 p.m. Pacific and then start another phase by taking a rest and then start another phase and doing some work to improve. So there's always something to improve. So I spend time at least 5 6 hours on improving myself, either related to trading or non trading. So I literally go to library, and the library is full of people, like young people, children, babies, teenagers, or parents. So I literally go to library, and I'm just a regular student there. So I just go there. Anyway, so today I'll teach you something related to option trading. So I have taught this topic before. If you have not learned it or you're not aware, then you will get some insight. You will learn something, and then I'll show you some charts of our recent trades. So I'll show you the entries and exits. So from entries and exit, you can learn what I saw when I send the alert and when did I take the exit on what basis. So maybe that will give you some ideas. Okay. So two topics today. So it should take at least 1 hour. So the first topic is option expiration expiry cycle. And then next one is technical analysis of stocks. So there are like 30, 40 stocks, at least 25, which I'll go through. Okay. So what you will learn today in this topic, option expiry cycle. So I just write down the main points, and then at the end I will recap and remind you that we went through these topics. So if you really don't know anything about option, then this is a little harder topic. If you know about options, but you don't know about option cycle, then you need to pay attention to just understand. Once you, if you pay attention, some people have different ways of learning. Like for me, I write it down, main points, or start visualizing. So whatever way your learning is, and just try to learn that way, or come back and listen to the recording. So recording will be sent sometime tonight. So what we will cover is what is option expiration. So if you're trading option, we need to know what is option expiration. Even if you're not trading option, even if you are in a stock market, you should know a little bit about option because you are in the stock market. So options play roles in the market move. So at least you should know, if even if you're not trading options. So people say, "Oh, I don't trade option. I don't need to know." No, that's not right. You need to know, and especially you should know when the option are expiring in a particular month because there are a lot of volatility. So what's going on the option expiration day, etc. So even if you don't trade option, you should know about option, the basics of options. So what is option expiration? What is option expiration cycle? Why we need to know option expiration cycle? Three types of options. So there are three types of option cycle. So this is what you need to know if you are trading option. What is modified option expiry cycle? So if you know that something exists called modified option expiry cycle, then you are aware, if you know you're aware of it, and then you can anticipate, and then you can patiently wait for that option month to be open, and then you can take advantage. You can put on the trade. So the more tools you have, the more or the skills you have, the more you can bring it to the market. So it depends on the market conditions. More options you have. So it's not you only have A and B option. Choose A or choose B. There's no C there. So if you know A, B, C, D, E, F, and then you practice yourself to go through the various alternatives, then you can pull out the best alternative, best option. So last night I was watching a war movie. I haven't finished it. It's called Wolf Call. So if you want to watch, you can watch on Netflix. So they had many options, and they had to choose one option at the very critical juncture. So at a very critical point, when you have to decide, the more options you're aware of, then you can choose the best option. And if you know option, then that it could be your option. So three types of option cycle. What is modified option expiration cycle? Examples of option expiration cycles. I'll give you those examples. What happens after expiration date? So you need to know understanding option cycle for leaves. So if you trade leaves, which are longer dated option, and how can you tell what cycle a stock is on? So the stock have three cycles, so you need to know which cycles the stock is on. So then you can prepare yourself. So knowing this is will help you. Just sorry, just a way of learning trading better. So what is the option expiration? Option expiration. Options have expiry date. All options expire on a certain date. So and that date is fixed. So it depends what kind of options you are trading. Is it a weekly option, monthly option, quarterly option, index option, a stocks option, futures option? So these all have different dates for expiry, and they expire. So you need to be aware of the expiry dates of what you are trading. So why we need to know option expiration cycle? Because if you don't know, first of all, if you don't know and we are long, suppose we hold it, it will expire if you don't do anything. It can expire and you lose a bunch of money. So you need, based on the option expiration cycle, if you know that, then you can build your strategies. So knowing is knowing the option expiration cycle will help you build different strategies. You can adjust your trade. So knowing the cycles will help you adjust your trade. Maybe you are in a losing trade, and you can adjust by having that knowledge to make it bring it that trade to break even. So maybe you just want to have a break even trade, so you can adjust, increase your success rate. So maybe by adopting a different strategy, you improve your success rate. And of course, trading in the dark not good for portfolio. So anything you do with the trading, you should know everything, what's happening to your portfolio related to your stock, the market, options, everything you need to know. So you are not in the dark. If you're in the dark, you get paralyzed. So if you don't know what's going on, when the time comes for decision making and you don't have all the facts, then automatically the nervous system breaks down. You cannot make decision, and then you get paralyzed, and then self sabotage takes over, and then we go down the hill, and we become pigeon. We close our eyes. We don't want to look at it. We don't want to hear it. We want to get it over and done and all that. So you don't want to be in that kind of situation. So there are three types of options: weekly options, monthly options, quarterly options. So there is a reason for all three, and all of these three have a different expiry period. So weekly options are just for open for is a shorter term options, 8 days. They starts on Thursday. Every Thursday they start, and then expires next Friday. So on Thursday you can buy, and then you can sell by Friday, or you can sell early. But they open on Thursday, and they are for selected stocks. So it's a shorter term options. It's basically they are for hedging purposes and for huge speculation. So if you're expecting a big move, you don't need to buy 1 month, 3 months, 6 month options. You just buy that shorter term duration. You're paying only for 6, 7, 8 days. Rent is like renting. You're renting only. Why buy a condo on the beach when you can rent it for a week? And you're there for 1 week for fun, and then that's it. So and then you will get out by Friday. And if you don't, then you will be evicted and lose whatever. So we I don't trade weekly option, but if you want to trade, then you are expecting a big move. So let's say you're expecting you just want to gamble. You buy on Thursday, and you think on tomorrow is the earning, and then you have the direction correct, and the option will just explode tomorrow. So you can buy for 20 cents, 30 cents, 40 cents, or Baidu, Apple options, and then it can go to 200, 300%. Or you can buy a whole bunch of options on different big stocks like Apple, Baba, Baidu, Google, PCLN, etc. All those they trade very cheap because it's only week 6 7 days. And then next week, if you're expecting the market, suppose you went long, and next week you're expecting market to go up, the whole basket of those options will go up. So let's say you put $1,000 in that in this gambling. So it's like a gam. This is a gambling because that $1,000 can go to zero. So unless you are really good in market analysis, and you are following your rules, and not just a haphazard way of buying options. So if you know the next week market will be up, and Apple, Baba, Baidu, Google, all these will move up, you can create a basket of options. So let's say $1,000, and you buy one, put $100 on each. So whatever $100 brings the options, two contracts, three contracts. Sometimes you get five. Sometimes you don't even get one. If it's a high price like Amazon, Google, you will not get it. So you buy just bunch of options, and then your objective is to make, like, suppose 30%, 40%. So you sell as a basket. So you sell the whole thing as a basket. You don't care if one is losing or one is 200%, you can do that. So weekly options, buy on Thursday, expire next Friday. They are for speculation and hedging purposes. So that's the purpose. Monthly options, so last trading day of third week, legally option expire on Saturday. So last trading day. So they expire on Friday, third Friday, but if the Friday is a holiday, then Thursday they expire. But legally they expire on Saturday, but there's no trading going on. So if Friday is the holiday, you need to get out by Thursday. So last trading day of the third week. Quarterly options. So last trading day of every quarter. So for quarterly options, it's last trading day of every quarter. So the quarters are March, June, September, and December. So you have different expiry. So that's why knowing that, okay, quarterly option may be expiring, weekly options are expiring, or monthly options are expiring, it creates volatility. So or if the futures are also expiring on the same Friday, then every quarter, then it becomes too much volatility. So knowing what is going on and why the market is gapping up. Sometimes you will see market gaps up on the futures rollover day. So why? So because the next month, next quarter futures are trading at a premium, and they are trading at a higher price. So you see 25, 26 points gap up. Let's say Nasdaq 100. So knowing that the option expired, that the future expired, and the new one is rolled over, so it's not something amazing happened. So last trading day of every quarter, March, June, September, and December. So what is option cycle? So option cycles, you will know more in just a few minutes. I'll explain to you via slide. Expiration dates that apply to different series of options. So there are three different series of options, and each series have expiration dates. And these apply to index and stock option. So just imagine there are three series, and each series have expiration dates. So the series are January cycle, February cycle, and March cycle. So let me go through that. So okay, let's explain this first. If you open option change, you will see that at least 4 option months are listed there. So if you open any option for the stock, you will see 4 options month listed. One is the current month. So right now we are in the month of June, and June has expired because the third Friday expired. So the current month you will see is July. So it's July already. So current month is July, which started from Monday. Current month became July on Monday. The current month was June till Friday because the monthly option expired on third Friday. So the last Friday was on 21st of June, and today is 27th of June. So the current month, suppose we are on 21st of June, the current month will be June. And then the subsequent month, they call it subsequent month, which will be next month. Just the closest month is July. So June and July. But because the option has expired, 21st of June has gone, Friday. So now the current month is July, and the subsequent month is August. So at least for all the options, you will see July and August month. So what happened if, let's say, if you were on 21st of July and 21st of June, and if you wanted to put a trade on, of course you won't select June because June is expiring that day. So you are on 21st of June. So you will select, let's say, July, month of July. And July, you will see like 40, 50 days. So you're not seeing August. So there may be a reason for it. So you will know why. So you're not seeing August. And then you're seeing September, or maybe you're seeing October. So now you don't want to put a June month because it's expiring today. So no use. You if you select July, then July only has 40, 50 days left. Whatever days, I don't know, maybe 50 days left. So let's see. Today is July. July 3rd is 19. So 3 weeks, 4 weeks. So July only has 4 weeks left on the, so 28 days, 38 days you were seeing, maybe 28 days. So you're seeing 28 days. So now you cannot put the trade in that stock because the June is not there, is expiring. July has 28 days, and then you don't see August, you see September or October. But as soon as Monday comes, which came on 22nd of June, so on 22nd of June, you see the July and you see the August because there's no more current month is July. So if the current month is July, then the subsequent month has to be August. So now you have 60 days to put the trade. So if you can wait, do you see my screen? I think you see my screen. Let me make sure. Yeah. So if suppose you find a stock and you want to put a trade, you don't want to put on Friday, that expiry day, because the option not available, then you just wait for Monday. And when Monday comes, then you get the August. So knowing that the new month will be added, pays big bucks, can pay you because you are not buying the closer option, expiry option, which is July. So, so we understand the current month and subsequent month. Besides current month and subsequent month, we also have 2 extra months. So they add 2 more months. So what are those 2 months? So we need to know that, and we come to know if we know the option expiry cycle. So this is what I was referring to, option cycle. So current month is July, subsequent month is August right now, and 2 extra months. So what are those 2 extra months? they come from the cycle. So we will understand what are these two extra months. So which two extra months? That's the question. We know the current month, the logic, how it gets removed, and then the subsequent month is added. We should know now. So we know current month, we know the subsequent month. So current month is July. We know that even though we are in the month of June, because the June month has expired, so current month is July. The subsequent month is August because it has to be next to each other. So July is the current month, then August is the subsequent month. Now, which two extra months? So there are 12 months in a year. So out of 12 months, which month, 2 months will be added to that option chain? So that's what we are trying to understand. Which 2 months will be added to the option chain besides July and August? So if you understand option expiration cycles, then you can answer this question, which two extra months? So you need to understand option expiration cycle. If you understand that, you understand which 2 months will be added. So what is option expiration cycle? So there are three option expiration cycle: January cycle, February cycle, and March cycle. So those 2 months come from these cycle: January cycle, February cycle, March cycle. So now it depends. One of the when the stock is listed for option trading, the governing body, they assign the stock to one of these cycle. So it's they choose. They must have some guidelines to assign a particular stock to one of these cycles, but they do assign it. So whether they assign it to January cycle or February cycle or March cycle, they must have a guideline. So whatever way, or random, or just pull out from the hat and then say, okay, this stock goes into the February cycle. So whatever it is, but we know that those 2 months, extra months, come from one of these cycle: January cycle, February cycle, or March cycle, one of the cycle. So what happened when, if let's say the stock is assigned to a January cycle, let's say Uber is started trading and soon the options will be traded. I don't think Uber has option yet. Even if it has, I won't buy options on Uber. So right now, so but I put it Uber, Lyft, these Slack, etc. on my database. So once the database is filled, like at least 1 year data, minimum 2 years required, and options are being traded, then I will start trading Uber and etc. But so let's say Uber doesn't have any option, and options will be allowed in near future. So Uber will be listed against one of these three cycles, and Lyft will be listed against one of these cycles. Maybe Uber is listed against January, and Lyft gets assigned February. Slack gets assigned March cycle. So what happened when they get assigned in this order? So stock A, B, C, Uber, Lyft, Slack. So let's assume like their cycle is assigned randomly. Maybe they assign randomly, or they have a formula. Who knows? So January, February, March. So if let's say if Uber is assigned to a January cycle, so this is the way it works. They say like this: January is the first month of the year. So say like that: January is the first month of the year. So the rest of the 3 months from the year will be the first month of the quarter. So they take out the first, because January is the first month of the first quarter. So all the first month of other quarter, they just assign it. So January is the, I should say clearly, first month of the first quarter. So I should say like that. January is the first month of the first quarter. So if January is the first month of the first quarter, then they take out the rest of the 3 months of the second, third, and fourth quarter and assign to it. They take out the first. So first is constant. They just changing the quarter. So January is the first month of the first quarter. So April is the first month of the second quarter. July is the first month of third quarter. October is the first month of fourth quarter. So they just take out the first month of each quarter and assign it to that stock, and that stock is suppose Uber. So when you see Uber option and you see if it gets assigned a January cycle, then Uber will have January, April, July, and October options listed. So with 2 months out of these 4 months, 2 months out of these 4 months, it depends what month Uber is trading. So if Uber, let's say if Uber started in October, I'm just thinking right now, if let's say Uber started trading in October, so they will give Uber October, because the current month, every stock should have a current month option, so they will give October for sure. And then every stock needs a subsequent month, so they will give, you will see November option listed for Uber. So you will see October and November. But because they assigned Uber into January cycle, so the next 2 months you will see is January 2020 and April 2020. So you will see these 4 months listed for Uber. October, because October is the first month, they started trading in October, suppose option trading in October, so they will do that October assign, and then they will give you next month November, because there's a 2 months they need to give, and then they will because they assign over to January cycle, so you will see January, and January is the first month of the quarter, and then they will give you will see April. So that's the way the cycle works. So this is the example of January cycle. Now the February cycle, because February is the second month of the first quarter. So February is not only the February is the second month of the year, it's the second month of the first quarter. So I should write here quarter and first to make it in rhyme, dog, log, frog. So it's same. So I'm teaching my daughter rhyming words. So I should put here first quarter. So second month of the first quarter. So since February is the second month of the first quarter, so they will assign the second month of each quarter to the same stock. So Lyft, so let's say Lyft get assigned to February cycle. So what they will do, February is the second month of the first quarter, so they will give May, August, and November. May, second month of the second quarter. August is the second month of the third quarter. November is the second month of the fourth quarter. So Lyft is assigned to February cycle. Now let's say Lyft starts trading in option in November. So what will happen? You will see November option, and because you need a subsequent month for sure, so you will see December option listed. So you'll see November and December. After seeing November and December, you need 2 more months. So because the Lyft is assigned to February cycle, so you will see February 2020, and you will see May 2020. So that's what will happen for Lyft. Let's on the assumption that it starts trading in November option. So you'll see November, you will see December, and then because of February cycle, you will see February, and then you will see May. All right. So David, you say July, August, September, December. So you should know which cycle this stock belongs to. So if you're seeing an option with the July, August, September, December, any option, so I'm answering a question by David. So if you see July, August, September, December, so how do you find out which cycle the stock belongs to if you see July, August, September, December? So you say, oh, July is the current month, so it has to be there. August is the subsequent month, it has to be there. So get rid of July and August. So what's left? September. So September is which month? Is, I don't know, 9 months. So is it the 9 month? So September is the 9th month of the year, right? So it is a third quarter. Is it the third? So I'm always confused with this. September. So September is the third month, right? Third cycle. So September. So September, and then if it has a September, then December. So it's correct. So it's a third cycle. So it is a March cycle. So this is stock belongs to March cycle. Okay. So February, May, August, November. So if it started trading in November, then we will see November and December, and then we will see February and May, because this is the second cycle. The third cycle. So here comes the third cycle. So let's say Slack. Slack starts to trade in December, the option. So we will see December, we will see January, because January is the subsequent month. And because they put Slack in the third cycle, which is March, so you will see March and June. You will not see September yet, because September is far. First, you need to see March and June. So you will see December, you will see January, and then you will see March and June. So by looking at the month, then you know that this is where the stock options belong. And knowing has advantage, because you can then anticipate which month will be added. Once the month is expired, then which month will be added into this cycle. It's also if you're trading leaps. So leap has some variation I'll cover. Okay. So previously they had options like this cycles. They did not have current month and subsequent month concept. They only have cycle. So cycles, they just assign it, and then you trade accordingly. So March, June, September, December. So what happened if you are trading, suppose Slack, and only these 4 months are available, June expires, then you get only September, and then you get December. So September is far, and you are in the third week of June or the fourth week of June. So you complain that if I'm a speculator or I want to hedge, why do I need to buy option for a month of September? I don't need, I just need a shorter term option. So based on all that demand, they created something called modified option expiry cycle. So they said, okay, we can introduce current month also, and then the subsequent month. So that's what they did. And now they have weekly options also on a big stock. So they have gone down to even shorter duration. So you don't pay the premium. So if you want to bet, gamble, hedge, speculate, you can buy weekly option, or just buy if something is expiring on Friday and it's Thursday, you can take a flyer if the weekly option is not available. So these short-term options are good for selling rather than buying. So you can sell. So for instance, you can collect a premium. Like today, I have so one stock can be traded many different way, right? One same thing can be traded different way. So today I give you one example of a stock, Shop. So Shop, I'll show you the chart of Shop. So Shop fell, and yesterday was the setup day. So yesterday was the setup day. If you are my student, you know that yesterday was the setup day, and today was the trigger day. So Shop triggered long. So if Shop triggered long with a defined risk, now I can do many things. I can buy shares, which I did. I can buy long calls, current month, next month, or 2, 3 months. So I did. And I send alert to different service. Then you can create a spread, a wide spread, because Shop moved big. So let's say Shop moves, you anticipate, okay, in 1.5 month, 2 month, Shop will at least move 20 points to the upside. So it's trading, suppose the support is 280, suppose trading at 290, it can go to $320. I can put an aggressive trade. I can buy 300 strike option and then sell 320 strike. So you can create a spread. So that's another way. I'm pulling out the tools, right? So knowing, so I have many alternatives. So at the time I'm looking at the alternative, I don't have just A alternative or B alternative. I have many. So many. I'm just pulling out my choices. So I have many options. So I say, okay, I can buy some shares. So I bought some shares in my shares options. I don't mix options in the stock. So I bought the stock shares in one portfolio. Then I ran and I bought some options, another one. Now I created a spread. So it doesn't matter what it does, up and down, as long as it's going up, I'll be fine. So I put I think 700 for the trade or 900 and expect to make 2000. Then if shop is at support 280, and I can sell near-term option, put option, and collect a premium of $4 or $5. Then my break-even point is 275 or 276, and shop is trading at 290. So I collected another $4 from the premium for the puts. So that's where the short-term option play role for speculation, for hedging, etc. So I sold the puts, collected the premium, and I'm hoping the shop just stay at the current level or move up, and that option will expire. So knowing all this, how many days are left, which month will be added, what the stock is doing, what it did, you can pull out different rabbits from your hat. So that's why they added current month and subsequent month for your hedging and speculation purposes. So speculation and hedging. So now I give you the example of option expiry cycle. So what happens as we move forward? Once the stock is trading and option cycles are there, then what happens as we move forward? So let's say today is January 1st and option expiry cycle is January. So let's say this stock Uber got assigned January cycle. So remember, all stock options have 4 available months. So there are 4. And because we are in the month of January, so the current month is January, and the subsequent month has to be February. So it's no big deal. We know it's January, so January, and then subsequent month February. So it's there. Now, which 2 months will be added? So it depends on the cycle it got assigned. So the cycle is first cycle. So based on the first cycle, January, it will get the first month of the next quarter. So the first month of the next quarter is April, and then the first month of the next quarter is July, which is second and third quarter. So 4 months. So which 4 months? January, February, April, and July. These 4 months will be listed for this stock called, suppose, Uber, and it's trading in the month of January. When the month is January, and it so happened that they assigned the cycle January. So if they assign the cycle January and today is January, then we should see January, February, April, and July. So now, what happens when January expires? So January is gone, and it has to have 4 months. So what will happen? So when January is gone, the February becomes the current month. Just like the June is gone, the July is the current month, and August is the subsequent month. So February will be the current month, and March will be the subsequent month. So now they added. As soon as the Monday opens after the expiry of January, you will see a new month added. So knowing on the third Friday of January that a new month, March, will be added, because you took a look on the subsequent month or the future months, you saw April and you saw July. So you know that April and July is there. March is missing. January is expiring. So the March will be inserted in the middle right here. So when you come, you know, okay, I will get another 50, 60 days on top of the days I have in February. So I can wait one more day to buy an option from the month of March rather than buying in the month of February. What's the name of the stock symbol? I'm just giving example. There's no name here. So Uber, maybe UBER, Uber, Lyft, LYFT, Slack, work, WORK. So these are the symbols: Uber, Lyft, Slack, work. But I'm just, this is just an example, Alice. So the one you bought, oh, shop, 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 Shopify, shop. So um, so if you are a stock trader, you should know about shop. So I mean, there are some stocks which I believe everybody should know if they are in a stock business. Everybody should know, like Apple, Facebook, Baba, Baidu. Sometimes I really come to know, oh, I never heard that. So, and then they are trading stock. So it's not good. It's must know. So February, not only you should know Shopify, yes, but you should know the stock related to shop. Who are their competitors? What business they do? So little by little. Warren Buffett, one time Warren Buffett said every investor should know about each and every stock in the stock market. So somebody said there are 8,000 stocks, Mr. Buffett. How you expect me to know about each stock? So he replied that start with A. So just start with A, and you will get there. So the February, March, April, July. So March is newly added. Now, what happened when February expires? So when February expires, we know there are 4 months available. So the March, February is gone. Now we have March, subsequent month, April. So we already had April. So if March becomes the current month, the subsequent month is already there. So we know that we are not getting any new month after April, because April is there. So after March, April is there. So where we will get a new month, we will get October as a new month because it is the first month of the fourth quarter, and the first month of the third quarter is already there. So third quarter is there, fourth quarter is there. The March is there, which is current month. Subsequent month is April, and then we have July and October, first month of the fourth quarter. Shop is very active, Alice, right now, is it? So I don't know. I'm not watching the market, so I don't know what's going on. But the stock I buy, they become very active. That's for sure. So October, first month of the fourth quarter. So when February expires, we have March, April, July, and October. All right. So let's see some more examples. So now we look at the example of leaves. So because leaves are longer dated, so addition has a little trick into it. So LEAP is a long-term equity anticipation participation security. So it's a short form of this big long phrase. So they are longer dated, like 2 years, 3 years out. So if you are very bullish or bearish, you can buy long-term options, and then you can sell against these long-term options. You can buy deep in the money instead of buying stocks. So if you're very bullish, suppose on Apple, you instead of buying Apple shares, you just buy 2 years, 3 years, longer dated, deep in the money options, and then you can just keep selling against it. The weekly options, you can keep selling, collecting the premium, or when 2 weeks left, you can sell the options against it out of the money so that you do not get called out, and collect the premium so you reduce the cost. So that's LEAP. Only the most popular stocks have leaves. More than 4 expiration months available for leaves. No more than 3 years out, so they have 3 years of expiry. Usually trade with January month option expiration. So they have January month option expiration. So LEAP have January month. And then they add new months in the month of May, June, or July. So that's what I read, that they add new months in the month of either May, June, or July. So that's the background of LEAP. Now I'll explain how the LEAP option cycle works. So this is a little complicated, so it's a big chart, so please pay attention. But you will get there if you go with me line by line, you will understand. So if you're just looking at the big chart, you are overwhelmed. So just start from the top and come down slow, and you will understand it. I know it's hard. So we are talking about leap. We're talking about option expiration cycle. This stock, whatever this stock is assigned to January cycle. And let's assume today is May 2017. So when I prepared this slide, it was May 2017, 2 years ago. So May 2017. So May 2017 is the current month. So the subsequent month will be June 2017. That's the logic, right? May is the current month, then June is the subsequent month. And because it is assigned to a January cycle, and January is the first month of the first quarter, so we need the first month of other quarters. So the other quarters we have is the July month and October month. Both are the first month of third quarter and fourth quarter. So when you see option cycle for leap, you will see the current month, which is May 2017. You will see subsequent month, which is June 2017. Then you will see first month of third quarter, which is July, because it is assigned. The key is this here, the first cycle. The key is here. So everything is derived from this key, January. So January, based on January, the October and July are added. Now, because it is a leap, so they will add coming January of the year and January of the next year to make it six months. So this is the standard options: May, June, July, October, and then if they have leap, then they will add January of 2018 and January of 2019. So then you will see 6 months for the leap. So when you see January and a longer dated January, you know it's a leap option. So now what happened is when the month of May expires. So when the month of May expires, the June will become the current month. That's obvious. July, which was already there, first month of the third quarter, will become the subsequent month. So it's logical. June is the current month, July is the subsequent month, so it's logical. October is the first month of the fourth quarter because of January cycle. So October is there. So it's logical. Now, so after October, what is there? January is there. We cannot add November and December because they don't belong to January cycle. So November and December don't belong to January cycle. So we will borrow this January 2018. We will borrow it. It used to be a leap related. Now it becomes a standard option. So we borrow January 2018 to make 4 months. So June, July, October, January are set like regular options, and January 2019 will still there. But because we borrowed 2018, we need to add another month of 2020. So January 2020 will be added. So knowing this in advance, let's say when the month of May is coming expiry, you know in advance that if you wait a little bit, you will get an extra year to be added to your option play if you want to buy that long of a period for option time for the option. So again, when the month of May expire, the subsequent month June become the current month. July was already there, so it became a subsequent month. Then October stays there as it is. January of 2018 was a leap option. It becomes a standard option. We borrowed, and January 2019 remains there. So January 2020 will be added. Okay. So what's next? Okay, the last one. So last example, and then it's all over. So the last example is for the March expiry. So I'm giving you March examples, so then you have some twists, some variations to understand. So let's say this stock belongs to March cycle and current date is still May. So we will have May as a current month, June as a subsequent month, which is logical. And because it's a March and March is the third month of the quarter, so we will get third month of the quarter. So third month, September is the third month of third quarter, December is the third month of the fourth quarter. So we will list these 2 months, and then we will add 2 more months for the leap, because the leap January 2018 and January 2019. So that will complete leap. So May is the current month, June subsequent month, third month is September of the third quarter, fourth month is December, so it's fine. Then January 18 and January 19. But what happened when May expires? So when May expires, June becomes the current month and July becomes the subsequent month. So here is the July which is getting added. So you see, when the May expires, we need after June, there was no July here. Do you see any July listed? You see May, June, September. We don't see July and we don't see August. So what happened when we don't see July and August? We need to add July. And what will happen when June expires? July will become a current month and then August will be added automatically. So for now, after the May expiry, June is the current month. It was there already. July is added, and then rest of the months remain the same. They don't get disturbed because there was a space in the middle to add a new month. And when June expires, then we can add another month, August. So July, August, and all this will remain same. So you know for this stock, no new year will be added because we have a space here to add few more months. So that's the way the months are added based on the cycle. So which cycle? There are three cycles: January cycle, February, and March cycle. They depend on the and then the months are added based on the quarters, the cycle, and the month of the quarter. So now, if you're looking at a cycle change, you need to know how you find out what cycle the stock belongs to. So, for example, David listed July, August, September, and December. So, you can use this. How can you tell what a cycle stock is on? Can tell by looking at front 2 months. You cannot tell by looking at front 2 months because front 2 months are always there for all the stock. So you cannot tell. Everybody has July and August, so you cannot tell which month. So you need to look at the third month option. So for instance, December is the third month. So if they have September or so January, February, March, April, May, June, July, August, September. So if they have September or December month listed, then you know it's a third month cycle, which is a March cycle. So if you see December or if you see September, like right now you're seeing in a lot of options. So if you see September and December, you know it's a third month cycle, it's March cycle. But what happens, so there's always a but. So but the January has an exception. So if the third month is listed there, so let's say you are looking at November and December, January, and then let's say you're looking at March. So, and you are in the month of November. So if you're looking at month of November, so if you look at November, November is the current month. Okay, you cannot tell. December is the subsequent month. You cannot tell. You see January. So if you see January, so you think it could be third cycle, a first cycle, because it's a January. But what if it's a leap stock? So if it's a leap stock, January is always there. It got added because of the leap 2 years ago. So you cannot, when you see January, you cannot trust January as to tell you that this is a cycle. So you need to step one more further. So look at the fourth month. So fourth month will tell you the correct answer all the time. So you can look at the fourth month. And if the fourth month is March or February, let's say February, then you know it's the second cycle, February cycle. So instead of looking at the third month, you may want to look at the fourth month to get the correct answer, especially if the third month is listed as January, because January could be the leap month. All right. So if you see January listed, ignore that, skip, go further. Okay. So what you learn today? You learn about option expiration, that all options have expiry, option expiry cycle, three side cycles. You need to know that. Three types of options: weekly, monthly, quarterly. Three types of option cycle: the January cycle, February cycle, March cycle. Modified option expiry cycle, which is current month and subsequent month. The reason for that is a speculation and hedging. We went through the option expiration cycle. I showed you the cycle example, and I also gave you the example, showed you what happened when the month expired, how the months are getting added, sometime in the middle, sometime in the end. And then we went through the cycle leap. So leap have a different way, 6 months. So it depends which month is getting removed and added. Sometimes the month of January is bumped out. And then how can you tell what cycle a stock is on? So you don't rely on the first and second, you look at the third. If the third is January, then you look for the fourth month to figure out the cycle. All right. So if you are not a member of Swing Option Service, you can take a trial. Only the first time member, not the one who are already in it. It's $27, and then after 27 it's 157 per month. And if you're interested in, we have a 10-month coaching program. It used to be 6 months, then 7, then 9. Now it's 10. I keep adding material. So it's a 10-month coaching program. If you're interested in finding out, please send me email. We will talk for 90 minutes. Please don't ask me question about duration, timing, call, what do you teach. I don't answer any of those in the email. So we need to talk. So it's no use telling you in the email. I cannot tell you what I'm teaching in 10 months. So it's just not possible for me. So I will start the next session, not the next session, but uh, the next topic, the charts. So I'm showing you in a second. Okay, so just a second. Okay, if you see my screen, please let me know. So you see my screen again, right? Are you there? Okay, good. So in this part of the session, it's already 1 hour past, but I will take another 15-20 minutes and I will explain to you some of the charts. So I'll go fast. It's not like in detail. So I'll show you fast. So trading is the hardest way to make easy dollar. So as you know, trading is very hard. But once you understand the rules of the game, then the money comes very easy. It's like literally sitting on the bed and the money comes. Like I give you example. Last night, I was about to sleep. So it's 8:30 at night here in California, and I missed a call from my sister. So my sister called me. So when she calls, I know she's calling about. First of all, she's asking how I'm doing, etc. So we talk every day, and then so I know that she's calling about Nasdaq future. So I open my trading platform and I look at the Nasdaq future. So I didn't open any chart. I was in the bed with the laptop, so there was no chart, nothing. I didn't open. So I just look at the Nasdaq, and it's moving, its rhythm, so you can feel the price. You don't have to look at the chart. So I was looking at it, and then it was trading at 7.6. 7.7, 7.6, 7.7, 7.7. And then I went downstairs I called her, she didn't answer. I went downstairs and I was having dinner, and then she called. So I asked her, where is an NQ? And she said 7681. I said, okay, I'm here in the dining table. Can you log into my platform and just buy one contract? So at 7677, 4 points lower. So she asked me, are you sure? I said, yeah, I'm sure. Just buy this one contract and I'll come upstairs and open the platform and look at it. So she did, and then she told me, yeah, I bought it 7.6. It dropped, and I bought. So I told her put a sell order 25 points. So she put the sell order for 25 points, which is $500, and then I put a bigger, wider stop. I didn't look at the chart, etc. So I said, okay, I'll put a 50 points stop. So risk reward is not in favor, but in this kind of trading, you need to put a wider stop and go for 25-point profit. And then I came upstairs and I saw the order there, and that's it. I went to bed, slept, woke up in the morning. That contract is gone. So I didn't look at any chart. I didn't look at any support or resistance. I didn't see anything. It's just what I saw is the price move, the way it started to reverse, and the way it was blinking at 7677. So bling, 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 bling. I said, okay, I'm gonna buy at 7677. So trading becomes easy if you know how, and then you can make easy dollars. So it's very hard. So especially NQ, you can lose your shirt right away. So I'm sure the professionals, they are milking NQ, or I mean futures or whatever the stock. They are just milking because I can you can literally see after the fact, right? That I wish I had bought this stock at this price, and it gave a clear-cut signal. I knew it, and I didn't buy it. And now look at it, what's going on? So somebody bought it at that price, and they drove it all the way up. So somebody did. Like for example, AGN. So I tell people, everybody, every stock which moves up like big time, there is somebody who know the news in advance. Otherwise, why the stock will move 1 week before, like a suspicious way? Why the stock is moving, and all these like big talks or mergers or acquisitions or buyout happening. It's not the machine is doing it or somebody doing it in another planet. It's somebody's two companies are talking to each other. And it's not like only the CEO is talking. It's not possible that one CEO is talking to another CEO and they have sworn to secrecy that they will never, ever, ever talk to anyone. There are a bunch of people involved in this big, big deal. So out of those bunch of people, somebody is telling somebody that this thing is going on, and then the word gets out, and then that stock moves. And then when that stock moves, you don't know what's going on. You just know that you need to pay attention and you buy it. And exactly, I didn't know the news. So send the alert. Members made 60,000, 30,000, etc. Same thing when Microsoft bought LinkedIn. I didn't know anything. So what I'm trying to say is follow the professionals. Try to read the chart the way they do, and there's no indicators or complication needed. You just need to know what they are doing and feel the price, and master one or two things. Don't need to master everything, but you need to know different things. You don't need to master it. It's just that you can have a good conversation, and you know that this thing exists. So master one thing, like for instance, stocks and options. So these are my I guess testimonials of my members. So I show you some charts. And the first chart is Adobe. So there is logical is a caveman trading. So it's simple caveman. So this caveman saw the Adobe is bouncing from 50-day moving average. So 50-day moving average is simple moving average, flat line. And when the caveman saw that this bouncing, so what are the odds of Adobe to fall, then to go move up? Well, this candle is telling me the story. Although it looks like a very tiny candle right here, and David sent me email asking me what did you do you see? So I saw this candle and I sent the alert, and this was an earning play. So uh, I send the alert to buy Adobe. We have earning play also service. We have 9 services. In case you don't know, go to mytradegenie.com and you will see 9 services, and there are 1 or 2 more services are coming. The courses are not listed. There will be 9 or 10 courses. So right now working on the second and third course. So on this, I saw and I sent the alert to buy Adobe calls, and this is what happened next day. And after that, it just kept going up and up and up. So this tiny candle told me that, okay, I think Adobe is worth buying calls on earning, like 15, 20 minutes before the earning announcement. And this is another Adobe. I don't remember exactly. I prepared the chart. I don't know if this is the same chart or what happened here. Bought here, and then maybe I don't remember if we bought here and exited here. What I did, but I prepared the chart. Next one, this is the AGN. So this is my favorite pattern for any stock. You just replace the symbol. When you see a downfall in a stock, and then you see a doji like this, and then you see a white candle. So why we have a white candle after this downfall? So sentiment has changed. This day there was the buyers and sellers were neutral, and then this day there was sentiment has changed, and then the market gap up. So if the market gap up after this downfall, then something is going on. Somebody knows something. I don't know. I didn't know. So our target was 135 here, 138 actually, 138, 139. And the target was right here at this level. But then one day we woke up like 2 days ago and we saw it at 168, so sold right at the open. So started receiving bunch of emails early morning pre-market. We will have this, that. So I started monitoring it very closely. We knew that this will happen. Gap up. It was trading at 167, 168. So when you are in a position and a big move like $34 option becoming 33, you sell first, ask question later. So right at the open, sold, bought at $24 and sold at 33, 31, whatever. I received a lot of quotes, 31, 33, 31, 33. So bought at 4, sold at 33. From $60,000 profit to $5,000-$6,000 was the average profit on two contracts. AVGO. So this is another example of earning trade. So this trade was done based on earning. Earning came here on a gap down. So I was watching, AVGO was on my list for earning play. So for earning, you don't need to buy, you don't need to, when we talk about earning, people say, okay, earning is a risky, we need to hold. Yes, earning is risky. If you hold overnight, you get lucky. Sometimes you fail. But in Adobe, I give you example, or others, it goes in our favor. So, but AVGO, we bought on the next day of the earning. So on AVGO, it gapped down. So it was pure gap down on this day. This is a gap down on 200-day moving average. So I waited. I said, okay, let's wait one more day for AVGO to settle down. So it settled down. Next day, it formed this white candle telling me, okay, everything is looking good. It looks like 259 is the support. And then by the end of the day, we went long. And then since then, AVGO is just going up and up and up. So what happened on the earning, it gapped down big and then found support at 200 and then reversed. So sentiment changed and then it reversed and it's just going up and up. This chart was prepared on the 18th of June. Today is 27. So it's still up. The AVG is still going up and up. BABA. So we bought BABA probably here at the gap up. So if the logic is sometimes there's no indicators on my chart, so you won't see any indicators, etc. So I just apply the common sense. So common sense telling me, okay, if the market is like this, going on a consolidation and then gap up, so why is gapping up? And this is the first gap from the consolidation. So why the stock is gapping up from the consolidation? So maybe there's some positive news from China, whatever it is. So went long, and here we sold. It pulled back, it did not fill the gap, but we sold it right here. This one is BABA again. So this BABA trade is 2 days ago. So the market was red. So this day when we went Baba long on 26th of June, so I was flipping chart one by one, going through the main stocks. So there is a 450 stock, and then there are main stocks. So the Baba is in my main stock. So I was looking at Baba, and I said, okay, so what is this candle is telling me? So purely looking at this candle. And before this, there is another one inverted like a doji. So counter attack. So what is the odd for me to lose money on Baba if I go long here? This was the question I asked myself, and I went on along on Baba right there on a red day, and then next day the Baba pulled back right here. I received email by member that, oh, I missed the Baba trade is trading below your suggested price. Should I go long? I said, yeah, go long. It's still good. And then Baba gapped up next morning, and we closed the trade with profit. So enter here, exit here, pure swing trading, purely based on this tiny candle. Now CF. So again, on CF, from the consolidation. So this is a consolidation up and down, up and down, up and down, and it gapped up. So why it gapped up? I don't know why it gapped up. I still don't know. I don't read the news. Like I don't decide the trade based on the news. I find out the news later. That was the reason, because the stock is moving for some reason. So the reason is already there, and by the time you try to figure out the reason and all that, and pollute your mind with the with the with the news, like those guys who write news, they don't know anything. They will write based on what they are seeing on the chart, not uh, there's no reason. They just, if this stock was going down, then they will list all the reason why the stock is going down. Because this stock is going up, so they will list all the reason for why the stock is going up. So they must have all those reasons. So there is a positive news. That's why the stock is going up. So we went long, and next day we sold. I still don't know the news. What was the news? This is Cigna. So Cigna we bought I think on a healthcare stocks were moving. We did not make much. We just bought it here, and then it went on a sideway action. So I closed it. And there are many reasons for closing the trade. And one of the reason is that if the stock is not moving and you have a better opportunity, you can put your money in other trade. So that was the reason I said, okay, let's close this trade and put the money into another trade. Don't need to keep holding when for 2 days it's moving on the sideway. So just close it. This is CTRP. So again, CTRP, if you look at the same pattern, so from the bottom, why it's putting on this big white candle? I don't know why. What's the new? I have no idea. But I know the C-Trip Chinese company, it belongs to hotel and travel industry and other stocks moving. So I just went long on CTRP. We missed this up move here to sell, but we sold here and made 25% gain. So we closed CTRP yesterday, like 5 minutes before market close, 10 minutes, 15 minutes before market close, we sold it and made 25% gain. So purely based on this candle. I don't know why it was moving, but it was moving. This one CTXS. So again, it was crossing 50-day. I went long here. I think I send this alert to the stock trading service, maybe not to option service. So we went long here, send the alert, and then on a gap up, sold. So usually most of the time when the stock gaps up, I sell. If I'm in a position, I need to sell, and especially if I have options. So I sold at the gap up. Cyber. So cyber, we traded. I think we traded as a long before, and someone sent me email that the cyber is moving up. So I put it on radar. It was looking good for a long, but then next day, yeah, I think it was this day. So this day, I received email that the cyber is looking good for long. So I did not buy. I put it on my watch list. So when somebody sent me email, I just put it that stock in the watch list just to see what's going on. So when I saw the reversal, we went short, we bought the puts and sold when it touched the 50-day moving average, exited, because this candle showed the reversal sign that there could be a pullback coming. So the pullback came and we sold at 50-day moving average. This one is FLT, so this is my favorite pattern. It's a hammer. We bought actually here on this red candle. So I bought calls and shares on this red day, and then it just went crazy down on the next day. So it's like all hell breaking loose, and then it reversed and created a hammer. So I started adding. When it started reversing, I started adding. I sent many emails to add more, add, and then we exited right here at the doji. So if you see my exit, they all almost look same. Gap up in the doji form, exit. Ask question later. This one, Goldman Sachs, so we trade Goldman Sachs often. So Goldman Sachs, we bought it here. Again, on a gap up, it was a tiny gap from consolidation, and then we sold right here around 199. So the target was 199, 200, and we sold Goldman Sachs 2 days ago. Halliburton, so we traded 3 oil stocks recently in 1 week. And because of the Iran news. So all major oil stocks were moving. So now I had to choose. So when all the oil stocks are moving, you have to choose which one is the most you like. So this is one of the three. So Halliburton, I went long here, bought some call for 25 cents and sold here with some gains. And then we had PXD. We sold it next day. We had Valero, we bought and we made big gains. So knowing when certain groups of stocks they start moving in tandem, that tells you that you can buy the best of them, whatever, one or two, no more than two at a time. So Home Depot, we bought it here at the consolidation, and then that's it. We closed right here when it touched the 50-day moving average and did not cross. So that to us was the resistance level. This IBM, so IBM was holding the 200-day moving average. So when the stock does the ping pong on 200-day moving average, it gives us a confirmation that 200-day moving average is solid support. So the odd favors to go long than to go short. So IBM right here went long and closed at when it hit the 50-day moving average. So simple as that. Bought at 200-day moving average, sold at 50-day moving average. So this just a line, and the line, blue line is telling me it's a 50-day simple moving average. Okay, people respect 50-day moving average. They consider it support resistance. So I assume it's a resistance right now. So I just sell it. So I sold it. This one Kellogg we bought yesterday. Yesterday we bought puts or the day. So the day before yesterday. Kellogg, we bought the puts right here on a gap down. So why the stock is gapping down from 50-day moving average? Something is not right. So if it's gapping down, maybe it will gap down again one more time or bearish move. So it's worth buying puts. So we bought puts right here and then next day gap down and sold. So that was the quick move we were looking and it happened. So bought the puts right on the gap down day and sold on another gap down. So 2 consecutive gap and we sold. This one Lulu. So Lulu we trade often and Lulu, it was a reversal. This was a big up day and then the reversal and then it held on 50-day moving average. So I was watching it. I said, okay, 50-day moving average is holding it for a few days and now it's moving up. So what are the chances of me going long and making money than of going short? Lulu is tanking. What are the odds? The odds are in my favor that Lulu will go up. So I see 50-day moving average, Lulu is going up. Okay, I go long, I went long, and then I sold on the next day. So quick money, and when you combine it with option, it's big money. Same thing with Mastercard. So if the what is it? If the financials are moving like Visa moving, Mastercard moving, PayPal moving, Square moving. So if all these Goldman Sachs moving, if all these are moving, so I just look for the best one. So I say, okay, 50-day moving average holding and then gap up. So what are the chances of Mastercard to come down then to go up? So chances are it should go up. Probability is in my favor. So when I look at the probability, I say it's in my favor. I will go long. So I went long, send the alert, sold right here on the tiny candle. Again, when the tiny candle form, I just sold it, logged again. This one is Pulti. So on the day of this group, the Fed announcement was about to come. So I don't know the effect of the Fed on the home builders, but all home builders stocks were going down. So I chose Pulte Group and bought the puts, sent alert to buy the puts, and few days later it tanked and we sold our puts. It hit the target and we sold. Yeah, this is the PXD chart. So when all oil stocks were moving, I chose PXD and then I chose HEL. And then when we sold PXD, replaced it with VLO and sold VLO also with profit. So I bought PXD right here and sold next day. When it crossed the 50-day moving average and set on it, I send the alert to sell PXD, take profit. Because knowing Pioneer Natural, this is a wild stock. It moves up and down big. So if any news comes and oil moves down, then PXD will come down fast. So it's quick move. This is the Shopify chart prepared today. So for 3 days it went down. Then yesterday it was doing this, a tiny candle sitting on the support. So I said, okay, let's see if tiny candle holds. So today when it held, we went long. So went long via stock, option, spread, naked put. So four of the things we did in different services. Here's the square chart. We went long here. We saw the drawdown, and then it reversed, and we sold at the 200-day moving average. So we saw the drawdown in the square. We bought here, and we saw this drawdown from 65 to 60, and then went to 72. This is TLRY. We recently traded. So this is what I saw. Simple move. Pullback and then a big white candle forming. I went long that the buyers are in. Something is going on. I don't know what's going on. CGC was about to announce the earnings, I think on 24th or maybe 22nd, something. So I said, okay, CG is coming up with the earning and TLRY is moving. So let's buy this. Maybe CGC earning will make this move up too, but we need to get out before CGC announce earning. So we entered here, made big bucks on TLRY via shares and via calls, straight calls and shares combination, and sent to alert to many services. And we sold around 49.70. Valero, so this is the chart of VLO, our trade. So we went long here because all the oil stocks were moving. VLO was a good one also. So EOG, VLO, SLB, HEL, PXD. So after we sold PXD, we bought VLO and we entered here. We sold right here when it bumped to 200-day moving average. So we exited right here with big profit. And here is a workday. So workday we trade often. So again, same formula. So it's the same formula. You ask me to cook, suppose a biryani, I cook rice, and then you ask me chicken biryani, I put chicken in it. If you ask mutton biryani, I just take out the mutton and put it on rice, and then I give you the mutton biryani. So it's the same thing. It's tom yum soup, shrimp, beef, chicken, which soup? They just put the meat. So it's the same thing. Which stock? It's the same thing. 50-day moving average holding, white candle, go long, sell at the tiny candle. I make it very simple for you because I've been doing it. So if it's not that simple, then you can take help from me. So this is the chart of S&P. It's facing resistance right now. So it's unable to cross the 29.50-60 level. This is the chart of NASDAQ. So market is in kind of in the middle. It's facing, again, NASDAQ 100 is facing resistance at 7,800. So it's a big resistance and sitting at 50-day moving average above. Here is the Russell. Russell is the most weakest. So it has not taken out the high, which was made in May. So Russell is way behind. So if you are evaluating the market only based on Russell, then you will say, okay, the market is very weak. But if you are evaluating based on Dow Jones and Nasdaq and especially Dow Jones and S&P, then you say, okay, market is strong. But if you're looking at only a Russell, then the market is really weak. So, but when you combine, then you have to come up with in the middle of that. The market is kind of weak and not very strong. Something is not right with the market because Russell is not moving. All the small caps are not moving. This is the resistance. And that's it for $27 for 2 weeks. You send me email. You know how to send me the email. You have been receiving email from me. It's askgenie@mytradegenie.com. Previously, we were Financial Market Wizard, so it's just another website. And if you're interested in 10-month coaching, then send me email again and we'll send you the appointment link and you can talk and find out about the coaching. It's a 10-month coaching. It's actually more than 10 months, but it's minimum 10 months. All right. So thank you for coming. We have been talking for 2 hours. The next one will be somewhere in July 10th. So July 10th, we'll be talking to you again for 1 hour. Thank you. Take care. Bye. Now I need to have lunch.